Let me keep this extremely short and sweet. When I first started trading, I sucked. Just like most beginners do, right? But fast forward a couple of years and I stumbled upon a way of combining just two technical factors that started to provide me with some of the greatest opportunities I'd ever seen in financial markets. They were so good, in fact, that fast forward to present date and I still utilize this exact strategy when trading in any financial market because it's never let me down and continues to work to this day. Let me talk to you for about 30 seconds before we actually begin. If I were to ask you to go place a trade right now in the markets, what would you be trading based on? Would you be trading based on some random indicator? Would you be trading based on pure emotion because you really don't have a strategy right now? If that is the case, then that is exactly what you need to do if you plan to blow your account or if you want to continue to lose money trading in financial markets. And if you do not, then you need to understand the strategy I'm going to be teaching you throughout today's video. So in this video, I'll be teaching you exactly how to utilize this two technical factor way of spotting extremely accurate trading opportunities. If that sounds good to you, make sure you're subscribed and click the notification bell because we come out with content like this each and every week and I don't want you to miss it. Click that like button for me while the intro and disclaimer roll, and I'll see you directly after. Welcome back, and just as an educational experiment and because I am curious to see if any of you can spot it without me teaching it, the trade you see on the screen was based on the exact strategy you're going to learn today. Can anyone tell me why the Aussie New Zealand took off like a rocket from this green zone? When I press play, you'll see what I'm saying. Can you tell me why? Can you spot out the two factors first? And before we even get into that, let me go ahead and show you the proof. I'll show you a clip from last week, us getting into this trade and taking profits. It'll take less than 30 seconds and I'll be right back. Check that out and I'll see you in a second. Here's our Aussie New Zealand trade. It's currently up a pretty nice amount. We're up about a 3.3 to 1 risk reward on this trade. Hey traders, so as you can see, we're here live in this Aussie New Zealand trade. I'm actually about to take the profits off on this trade because of the same things you're learning in this video, but the opposite direction. We came into this area of support and all of the things lined up for me to see this as a pivotal reversal zone out of the Aussie New Zealand, which caused me to then place a trade, which is now up over 100 pips. And my stop loss on this trade was about 27 pips. So that puts me at a 4 to 1 risk reward. But because we've come up to another zone that I see as a pivotal reversal zone in this market, and we've seen some resistance from here, I'm going to go ahead and take off the target here with about 102 pips on this trade. So there we go. Position is closed, and now we'll dive back into the video and I'll explain this trade in detail and break it down fully for you. See you in a second. So were any of you able to identify why the Aussie New Zealand took off like a rocket? If you were, or if you think you were able to, go ahead and put it in the comment section below. I'm really curious to read through your answers. And let's dive into it now. What is this two technical factor way of creating really, really accurate trading opportunities? Well, if we're looking at the chart right now, the two things we're going to be combining are levels of structure, which we talk about a lot on the channel, but that's not all. The RSI indicator is going to play a huge role in this. The RSI indicator is easy to find, and my setting for it is 14. So with a 14 period RSI, what do you think I'm looking for while we're coming into a level of major structure? Here's that level of major structure. While we're coming into it, I want you to look at the RSI indicator. What's happening, and maybe this will help. If you're not familiar with what this is, it is called RSI divergence, and it's a very powerful tool you can use in your trading. Using RSI divergence by itself will not give you extremely accurate trading opportunities. It's good, but it won't give you these holy grail-like trading opportunities. What will, though, is combining this RSI divergence with major levels of structure. So right here, what we have is a major structure level, and I'll show you how to point that out in just a second, a little later in the video. We talk about this a lot on the channel already, so I'm gonna dive into RSI divergence first. What we were looking at for this trade is we have a market that's pushing down, right? I'll draw this trend line so we can see the lower lows that price is creating. While the price is creating all of these lower lows, the RSI is diverging by creating higher lows. That's all RSI divergence is RSI doing the opposite of what price is. If price is creating lower lows, lower lows, lower lows, and RSI indicator is creating higher lows, higher lows, higher lows, then we have RSI divergence. Now, as you can see, RSI divergence alone was happening this entire time, but price never made its move higher. Why? Because it didn't have the other bias. Price didn't have the major level of structure to bounce off of with this RSI divergence. So that's why we don't just trade based on solely RSI divergence. In order to get the most accurate trading opportunities, we wait for this RSI divergence to creep into our zone of major structure, which again, I'll show you how to point out in a second. But as you can see, we continuously made higher lows until we got into this zone. Once we were in this zone, I had an entry reason on a smaller time frame. And as we already saw, the market took off from this area like a rocket ship. Now, how would you actually utilize this? Well, you would take a look at a market. You would go out to your higher time frame. My entry time frame in this case was a 1 hour. So I was looking for structure levels on a 4-hour chart. If I zoom the chart out, where do you see structure? Is it not right in this green box, right? In this green box, you can see that we had plenty of areas, plenty of times that this market tested this level and was pushed around from it. With that being the case, this becomes my important area of structure. And that's how we utilize the first step. We find our important area of structure. That's step number one. The second technical factor we use is this RSI divergence. So we would sit here on the same time frame. We don't drop down a time frame. We stay on the 4-hour chart, the same time frame we spotted out our structure level, and we look for this RSI divergence, the RSI making higher lows while price makes lower lows. We wait for that divergence to continue. The RSI divergence has to continue making higher lows in this bullish example. We wait for it to continue until we get into this zone, and then we have an entry reason on a smaller time frame. Now, you just saw us take profits on this trade. And when we did, I told you during that clip in that video that this was an area I would be looking at for possible short trades. Let's take a look at what happened in this area. If I push the market forward, we see that we get what? I want you to look at the RSI right now and look at price and tell me if you can spot the reason I was interested in this trade from this area. Well, initially, of course, we have to do step one. Initially, we have an area of structure that's acted as support, 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 resistance, an area of structure that is a major area of structure. When price gets to this major area, what did we just talk about that we're looking for? We're looking for RSI divergence in a major area of structure. Think the opposite. If you're not familiar with RSI divergence, think the opposite of what we just did. If for bullish RSI divergence, we need price to be making lower lows while the RSI indicator makes higher lows, then for bearish RSI divergence, what do we need? Price making higher highs and the RSI indicator to be making what? Lower highs. As the RSI indicator makes lower highs, we get divergence. And we get that divergence while in an area of major structure. This is a two technical factor way of trading that has provided me with some of the most accurate trading opportunities I have ever seen. And we're going to go through a few more examples of this. I'm going to make sure you have an extremely good grasp on it, but I'm not going to have time to discuss the entry reason in this video for you. But if you want the exact entry reason I use, not just the way I spot out these extremely accurate trades, but the actual reason I press the button to click buy or sell, and you want to know more about the stops and targets that I use, then instead of adding it to this video and making this a 30-minute video, because I know your time is precious and so is mine, what I'll do is put a link in the description where you can get that for absolutely free. You'll just click that link, give me your email address, and you will get instant access to the exact entry reason that I use on this exact strategy and the exact stops and targets that I use for this as well. So if you're interested in that, it's free. There's a link in the description. It will be labeled free training. Now, what we're going to do for the remainder of this video is I'm going to take you through the top 5 major pairs and discuss how I would use this exact approach to price action trading. We'll also be going over how to identify major areas of structure, and this process of going through the top 5 major pairs will give you a much better grasp on exactly how I use this approach in the markets every single week. So let's go ahead and click play. As you can see from this area that we pointed out, we get RSI divergence. We are in the major level of structure. What happens to price? price drops. So how are we going to be using this on the top 5 major pairs throughout the rest of this week? Let's talk about it. First off, we'll go to the euro dollar. On the euro dollar, do you see anything interesting here? Let's talk about what's already happened. Okay, on the euro dollar, I want you to pay really close attention to this. Last week, we had a trade on the euro dollar. I'll play less than a 30-second clip and we'll dive into why we placed that trade. What's up, traders? Looking at a nice long opportunity here on the euro dollar right now. I'm gonna go ahead and open up a live trade with you guys. My target, I'm sitting here looking at this as a 1.4, but what I'm really going to do is manage this position on the way up. Once we get to that 24, 25 pip target, I'm not going to have necessarily a take profit there. I'll be moving my take profit up and moving my stop loss up to break even at around that point, and then continuing to see if we get some type of big reversal out of this market so I can get more than a 1.4 to 1 risk reward out of this trade. For my risk, I'm going to be risking 1% on this trade. And now we're ready to go ahead and click the buy button. There we have it. We are set up. So as you just saw, we had a trade from this exact area. Knowing what you know now, can you tell me why I was interested in a trade in this area? Let's zoom the chart out. What's the first step? Find a major structure level. And by the way I spot out major structure levels is recency. Was it a recent level tested by price? And either strength or frequency combined with that. Strength, meaning did this market get pushed around like the bully would push a little kid around on the playground? The answer to that question right here, yes, we started a whole new uptrend from this area. So this had strength and it had recency. That combines to create a major level of structure for me. So I saw that major level, that's step 1. After seeing the major level of structure, what am I looking for to provide me with some of the most accurate trading opportunities possible? Well, if we take a look at the RSI, what do you see happening? We have a low right here on price and a lower low on price. We have a low right here on the RSI and a higher low on the RSI. With that being the case, what do we have? We have RSI divergence. Now let me show you how powerful this is. This was the reason we took that trade and the entry reason that you'll learn in the free training below. But outside of the reasoning behind this trade, let's take a look at what happened next. We had this level spotted last week as a level we would be looking for possible short trades out of on the euro dollar because it was a major level. Scrolling the chart back, you can see that this is a level that was tested multiple times as resistance. So what do we have? Recency and frequency. We have a level that was recently tested multiple times. That means recency and frequency is valid, and for that reason, we can look here for possible trading opportunities. If we want to find the best trading opportunities, what else do we need? Divergence. Do we get RSI divergence here? Let's draw trend lines. It's a very easy way to do it. From high to high, there's our trend line. From high to high on the RSI. Do we have divergence? Is this a lower high than the previous high on the RSI? Yes, it is. You can see that our trend line is sloping down. Is this a higher high than the previous high we had in price? Yes, it is. You can see that the trend line is sloping up. And just to show you how powerful this is, you can already see it. The market fell from this area as soon as this happened by over 140 pips. Now you tell me, if you were placing a trade on a 1-hour time frame, do you think you would have hit targets in 140 pips? I hope so. Otherwise, you're looking for way too big of targets. So that is the power of this. Let's keep going. At this point on the euro dollar, what I'm seeing is, I'm going to zoom out to the daily chart. We don't have much unless we get all the way back down to our support level for this upcoming week. But now let's take it, since we don't have much here, let's take a look at the pound dollar. On the pound dollar, what we'll be waiting on, this is giving me a good opportunity to show you the way I wait on this in the future. We're on the daily chart. What I'm looking for is major levels of structure. Was this a recent level of resistance? R, recency. Yes, it was. Was it strong? Did it have strength? Will it push the market down dramatically in a big way, like a bully on a playground would a little kid? So yes, we have strength. My major level is found. What do you think I'll be looking for on this chart? As we get into this area, I'll be looking for the market to show me that we have RSI divergence, meaning that price is going to continue to make higher highs getting into this area, and the RSI is going to make lower highs getting into this area. If that happens, and we get this lower highs on the RSI, and we get higher highs on price, then I'll be looking for a particular entry reason, again, that will be in the free training below. This video is already gonna be too long, trust me. So I'll be waiting on a particular entry reason right there as we get that divergence, and I'll be looking for that entry reason to push the market down dramatically. So that's what I'm looking at in the future here on the pound dollar. Now you may be asking, what about that green zone? Well, that green zone is really not gonna be a major level, but if our green candle we have right now closes up here, then our new major level of support will be the most recent level of resistance that was broken. Ask yourself the same thing. Is this level recent? The level of resistance that was just broken? Yeah, it's the most recent level that was broken. Was it strong? Yes, it pushed the market around dramatically. Was it frequently tested? Yes, as resistance here as well. So we have all of our factors combining, meaning now I would be dropping down to smaller time frames, 1 hour and 4 hour charts, looking for this market to pull back. On a 1 hour chart, it'd be more likely. So let's go down to that. On a 1 hour chart, it's quite possible that if this market has a pullback all the way to this zone, we start to see this market go oversold. If we see this market go oversold and start to provide some kind of RSI divergence while we are oversold, higher lows on the RSI, lower lows on price, then that is when I'll be looking for possible trading opportunities out of the pound dollar to push the market higher. Let's move on now to our third pair, which is going to be the Aussie dollar. We have our major level of structure. Now, I want you to imagine this. At this major level of structure, before we even drop down to smaller time frames, what would I be looking for on those smaller time frames? If I'm looking for my major level on the daily and the 4 hour, then on the 4 hour and the 1 hour, I'm looking for what? RSI divergence, right? And right now, I want you to look at the RSI. We've had an overbought RSI here. We've then had higher highs in price into the zone of structure I was already paying attention to for possible short trades. We have lower highs on the RSI indicator as we come up into that zone. If I get an entry from here, which I will be waiting on throughout the rest of this week, if you want to know what that entry is, this is the last time I say it, I promise. It is free, linked in the description. I'll be looking for that entry here and for the market to reverse and push down from this level. Why? Because we have a major level of structure and RSI divergence coming into that major level, which in past experience, for me at least, has provided some of the greatest opportunities I've ever seen. Why is this a major level of structure? Look back, ask yourself the three major questions. Was it a recent level that was tested? The answer is yes. It is the most recent level, looking left, of resistance the market just hit. Is it a strong level? Well, did the market get pushed around like a little kid would if there was a bully on the playground? Yes, it did. So that's all we need. Recency and strength, or recency and frequency. In this case, we have all three because this level was also tested multiple times by price. So as the market comes into this level, because of that major level of resistance, I'm looking for RSI divergence and an entry reason. Next up, we have the dollar yen. The dollar yen is pushing higher right now. Now tell me, before we get to this zone in red, our major resistance level, right? Recently, it was tested and it was a very strong level of resistance. Before we get to that area, am I going to be looking for divergence and trading based on that on lower time frames? No, because that doesn't provide the most accurate trading opportunities possible. If I go down to the 4 hour or the 1 hour right now and I see divergence, I would not trade based on that divergence. Why? Because we're not in the zone I want to be in. Okay, this major level of structure is very important. Just divergence is not enough. Just major levels of structure is not nearly as accurate as combining the two. So what we have to do now is I would be waiting, and right now it looks like we could get RSI divergence. See how high this RSI went? We're up closer to like 85. So the RSI went extremely high on most yen pairs, by the way. The yen must have tanked because the dollar yen, the CAD yen, the euro yen, they all have this huge push up. And with that being the case, and we have this really high RSI, we very likely can get into this level and still have some type of RSI divergence. If we do, I'll be looking for a specific entry reason in this area between 107 and 106.41 because it's a major level of structure and we need RSI divergence in that level in order to give me the greatest trading opportunity possible. Let's move on now to the dollar switch, which will be our last pair. We will take a look out on higher time frames like the daily and the 4 hour. Currently on the daily, we have a recent level of resistance that I'm looking at for possible trading opportunities. This is my first step. Got my major level. Second step, I'll be dropping down to smaller time frames and looking for RSI divergence. A really good example and a question that I have for you right now is, would I be looking for trades right now? You may be saying, well, Stephen, we got RSI divergence. Look at this. Higher highs. For those of you pros out there, you've already spotted it. We got a high. We have a higher high here. We have a high. We have a lower high here on RSI. We got RSI divergence, but do we place trades based on that? No, we do not. This market is not overextended, in my opinion, and not ready to take a big fall. I'm not ready to trade this market until we get up to my next major level of structure resistance. At that point, yes, I will be looking for RSI divergence in that area to provide me with an incredible trading opportunity that is extremely accurate. Lastly, do not take and just start trading these blindly. They're not 100% accurate. Nothing is. They have provided me with an edge, but for you to be confident enough to continue trading them through the inevitable losses that they will have eventually, you will need to backtest this. You will need to demo trade this for 6 months. Make sure you're comfortable with it and make sure you understand it completely. Then you will need to backtest it and demo trade it yourself to add confidence and to give yourself the best chance of trading it profitably. One more time, and the last time I'll say it, if you're interested in the entry reason that I use for this exact strategy, it is listed below. And if you are interested in some more advanced training, then we're actually doing a very early Black Friday sale starting this Thursday or Friday, where we'll be offering everything that I've ever come up with in terms of programs or courses for extremely discounted prices. And these are prices that are lower than anything we've ever offered before. But we will be limiting access to this to the first 50 traders that take advantage of it. If you want to sign up to be alerted whenever we do come out with that this coming Thursday or Friday, so you can take advantage of it, then the link in the description is labeled Early Black Friday Sale. You can go over there and opt into an email list where we will notify you, and you can take advantage of that if it's something you're interested in. If not, that's totally fine too. Again, make sure you subscribe here. If you enjoyed the video, please click the like button and comment, as it helps us out greatly in reaching other traders with this valuable content. If you haven't already, make sure you're following us on Instagram at The Trading Channel. I wish you the best of luck in all your future trades, and I hope you not only have learned this today, but you take and implement it correctly by backtesting and demo trading before you try to start trading this with real money. That's a path to failure, not success. So make sure you backtest, make sure you demo trade to see that it's profitable for yourself. I hope we don't, but we may see the market in different ways, and that may keep you from being profitable with this. Make sure you understand it, backtest it, and demo trade it before you start trying to trade it with live money. Again, I hope you trade green, and I'll talk to you guys in the next video. See you soon.